Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education playlist on my YouTube at Chads Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about the idea of a swing high. You've probably heard that term before. You want to know what it means. Here's a quick, of course, AI overview. You can pause and read this on your own time. Here's an image showing the swing high and swing low, but we'll talk about swing high. It's a price advance. And then you set a major high and the price comes lower. And here's another image as well. You see in this uptrend, it sets a temporary high, comes back down, sets a temporary low. This is your swing low, but here are your swing highs. All right, so what does that mean? What's the point of it? Why do we care? Well, let's take a look in the Bitcoin chart. We'll use that as an example. We'll go to the weekly chart. Now, a swing high is essentially the highest point in a major move. And so, for example, here, the price moved up, price is advancing, sets the swing high. It comes back down, and we set the swing low. It broke through and set a pair of swing highs up here as well. So when you look at a swing high and a swing low, there's a couple reasons for it. Some methods, like Fibonacci, Fibonacci extensions where you take the swing high, the swing low, and then the retracement high. You take these 3 points. You're going to use that for things like Fibonacci's to extend out. You can also use it, very roughly for like a measured move. Take the height of a consolidation from a swing high to a swing low, and you can project it out. It's a term people throw around a lot. It doesn't matter specifically that much in terms of where you market, as long as you're recognizing advance, and here's where the price paused, and here's the major high. And you see it too with an equilibrium or like a tightening range. Move up, boom, 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 tightening range. Here's your swing high. Here's your major high. The same thing is, of course, is true with a swing low. We talked about that in a prior video. Here's a swing low. But you see your swing highs, and anytime you're breaking the swing high, you're essentially starting a new channel. You're starting a new leg up. Here's your major swing high. Here's another swing high. Here's another swing high. These are major highs. Even though it's in a downtrend, it's in a corrective state. You see here it's in an uptrend state. You still can have swing highs and swing lows. They're just the major high points and major low points in a consolidation range. It's a way for you to mark out where the price might pause, where the price might continue. And again, if you're doing some techniques like Fibonacci extensions or Fibonacci retracements, you're going to grab swing highs and swing lows and use that, to project out certain potential price movements or ranges of potential price movements. So this is a very general overview on the concept of what a swing high is. You can read this here on your own. Here's a couple images, the swing high. Here's another image of the swing high. But that's what it means. You may have heard this term and wondered, hey, Chad, what's a swing high? What does that mean? So here you have it, and now you know. And this is for the Trading Encyclopedia Daily Education playlist on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Folks, thank you so much, and I'll talk to you soon. Big Chads out.